Hi, I'm Brendan MacDonald. I'm a partner and the Chief Operating Officer of StepStone Real Estate. StepStone Real Estate is a private markets investor and advisor. We have roughly 800 professionals globally, a global client base, and we're active across private equity, infrastructure, private credit, venture, and real estate. Within each of the asset classes, we're a primary investor in funds, as well as an active provider of co-investment capital and secondary and recap capital to private market investors and managers. We've been active in the secondary market since the mid-2000s. At that time, there were roughly 3 firms that were participants in the space. Annual transaction volume was less than $1 billion in any given year. Since that time, there's been a significant amount of growth in the level of activity. There's been some new competition that's come into this space, but also increased awareness. And the annual volume of secondary transactions is roughly 5 to 10 times what it was pre-global financial crisis. But one of the most interesting developments over that time frame has been the introduction of this new trend, GP-led secondaries. And this is essentially where liquidity providers are partnering with managers in order to provide liquidity solutions to investors, managers, and their vehicles. So while this is a relatively new concept for many observers of the secondary market, we've actually been active participants in the GP-led secondary space since we raised our first fund in 2010. So during this time, this was the early recovery from the global financial crisis. Funds values were down, loans were in default, and managers needed capital in order to restructure balance sheets and stabilize assets into a recovering market. And so during this time frame, we structured a number of transactions where we provided new capital to these vehicles in order to help them restructure and stabilize. And often we were doing this on a preferred equity basis. Now, since that time, we've continued to be participants in the GP-led secondary space. We've done everything from partner buyouts, fund wind-ups, buying stakes in joint ventures, private real estate operating companies, all different formats that institutions and managers come together to invest in the private real estate space. We've really seen this as an all-weather strategy. Over the last several years, with first the pandemic and now the current interest rate environment, you've seen business plans interrupted and now valuations and capital structures being impacted. So as we head into this new environment, we do anticipate a particularly rich opportunity set for GP-led secondaries as managers and investors need to adjust capital structures and business plans to the changing capital markets environment.